All right, folks. I'm going to start reviewing some markets, maybe at least two markets, to see what's going on. Um, Before I go any further, on the left-hand side, we have the Renko chart. The purpose of this Renko chart is basically it identifies really good levels and does a lot of other things as well. But it's like X-raying the candle or the bar and seeing what's in it in terms of volume, in terms of other things as well. And it also consolidates all of the bars horizontally into single bars that can paint a certain type of picture. A lot of pullback buying, breakout buying, profit taking, things like that. All right, and the second is in the middle. I have a weekly at the top, and then below that I have a daily. Now, the weekly is your higher time frame. Basically, it shows levels and it puts the daily trend into the context of those levels. Meaning, when you take a look at the daily trend, you'll know whether that trend is a counter trend, whether it's with the weekly trend or a counter trend back to a support or resistance level on the weekly time frame. That's important information, as you'll see soon, and how it can be utilized. And on the right hand side, you have just a lower time frame entry. So basically, it's really straightforward. You just think about it this way. You have two time frames. All right, start with two time frames. The higher time frame is your setup. The lower time frame is your signal. You wait for a setup, and then you wait for a signal. Again, you wait for a setup on a higher time frame and a signal on a lower time frame. Okay, now if you take that concept further, you add a third time frame that's even higher, and what that does is it puts the setup and the trend into perspective between levels of support and resistance and a certain context. And that context is it a counter trend? Is it with trend? Or basically it's just trend and levels. So I hope I don't want to overcomplicate it, but that's the idea. And the Renko can kind of X-ray vision. That's what it is. X-ray vision, and gives you some key insights. Okay, now let's move on. All right, let's start on with the YM chart. Now I'm saying this because it is very interesting to me. I think this market is stronger than the others, and you can tell by the I think the relative strength. Somewhere here, the relative strength is I don't know where it is, but the relative strength is pretty good on the Dow. Even on Friday, it wasn't falling as much as other markets like the Russell, and I think even the Nasdaq, if I'm not mistaken. But anyway, let's go through this step at a time. Starting off with the higher time frame weekly, we see that the market basically tagged the resistance level. The high was 3659. We just 36. This is going to take too long. Anyway, somewhere around there, right? Now, as so that was the weekly level. I mean, that's just the high, right? So you see that little point, that pivot right there on the top chart. That was the weekly level. Now, taking a look at the daily, we notice that as price moved to that level, right, it couldn't break through, meaning it rejected, all right, on increasing thrust. After that, it pulled back, tested the prior high, and that set up a bounce. That bounce was short-lived and had a rejection, as indicated by the increase in thrust and volume below, where you have big red. And then from that, what it did was it took out the prior low right over here. Okay, so this is interesting to me because it puts it in a potential spring position, meaning if it's going to bounce, it needs to bounce here. Otherwise, there's, it's going to go lower, right? So, I mean, it has to bounce right here or else it's going to go lower. So now what we want to do is kind of zoom in on this potential spring position to see what's going on. And as you zoom in, a couple of things you want to consider. And the first is a lower time frame, and second is levels. For the lower time frame, you can use a 15-minute chart. For levels, you use a Renko with volume. So first, let's take a look at the 15-minute chart to see what is going on. And you'll notice that as the market is in its potential spring position, on the 15-minute, it's getting very interesting. Why is it getting interesting? Well, because at that low, look at what's going on. You have this box. Why is it that at the low, it's going sideways like this? I mean, it penetrated the low, right? That zigzag right there, it penetrated it. And instead of breaking through, it's going sideways. Why is that? Does that make sense? Doesn't make sense unless there's something else that's going on. So we see that from this initial breakdown, you had the biggest price volume in 17 and 22 waves. After that, you had a spring. From that spring, you had the biggest price move in 30 waves. Okay, so you have on the left-hand side, you have this price and volume. On the right-hand side, you have a spring followed by a big move up, the biggest in at least 30 waves. Okay, now maybe that's because of some short covering at the end of the week. Regardless, the spring rejected the breakdown and bounced up with the biggest wave in 30 waves, covering 277 ticks. Now, examining this wave a little lower, you see green and you see green. There's aggression. Buying and more buying. After that, you have some sideways action over here, and that's it. That's the, that's the end. So bottom line is this is setting up for a bounce. Now, I don't know that yet because, the weekend and all of that. We'll see what happens on Monday. But it would not surprise to me that if at least this market takes out this high, it has a shot to bounce. All right. So it didn't take out the high. I need to see it. Actually, I wanted to take out this box high. The box, if it takes out the box, yeah, it can definitely bounce. So I just want to wait till Monday because you don't know, it can gap down as well. So just wait, see how this price volume action continues and whether it takes out the high, which can initiate a lower time frame trend to test higher time frame levels. Where levels? And that brings me to Renko. So what we see here is that this low was broken by an increase in volume. All right, so you see the biggest volume here in about 21 bars or at least 28 down bricks. All right, so base 21, this is the break, okay? You see the expansion in volume? It broke and immediately it bounced. Why did it bounce immediately? Because of this wick and this thrust, it tagged it and it reversed. So typically when you have these wicks, they represent rejection. It's not just a wick that means like, okay, there's a wick because it went down and went up. No, it means that it tried to go down, failed to go down, the bears failed to make it go down, and therefore it reversed. All right, so bulls overcame the bears right there. The wick means that they rejected the move down, meaning the bulls overpowered the bears and brought it back up. So that level was tagged. When it was tagged, there was a lot of volume. That volume was increasing because it took out these lows. So, it took out the lows and increased in volume. Now, what I don't understand is how come there was a bounce right after. So I can only conclude that it was because of this level here, which had that wick rejection, meaning the bears may have covered their position or who knows what they did. And so this area, because demand overtook supply, is important, and that's why it caused the bounce. So we'll see if it holds and whether this can take out some of these highs right here for a rally, right? A little bit of a rally, or at least a brick or two, right? And oh, that's also why. The other thing to note is that on the left, you can very clearly see that was a area, like a break and test or whatever it was. Test of the breakdown. Bing, bing. Okay, so we'll see if this thing breaks through or not. What I'm looking for, if it does, is this block. This block of 1, 2, 3, 4 is a very aggressive buying here. All right. And you have a nice little level, so if it breaks, we'll see if it does or not. Okay. So short term, maybe a little bit of bounce. See if this high volume thing holds and it goes sideways. Because a lot of time the high volume brick holds the right hand side consolidation. Right, so see if that happens. Or whether it bops up and takes out the stops. There's some stops here, here, and here. So it can easily take out those stops. And then we'll see. Now, putting the picture together, we also need to consider the weekly time frame, and in the weekly time frame is a little not that good, because you see that it basically took out the high, and it went high and it's closing low end. So we're at a resistance point in a potential shortening of the thrust or up thrust of the November 2nd high, potential upthrust of that November 2nd high, right? Or shortening of the thrust. Shortening of the thrust is in the context of an uptrend. Upthrust is in the context of a range. So in the context of a range, this would be a potential upthrust position. It's not verified yet. It's only upthrust position. That's in the weekly. And then if you take a look at the daily, you see that when it went into that upthrust position, there's actually a rejection bar. That's not a good sign. It means it's rejecting the breakout. And then that initiated the move down to test support, putting in a potential spring position, which is where this cause occurred, this liquidity was engineered, and you had this strength come in on a lower time frame, probably setting up a bounce. Let's see what happens, and whether it breaks to go lower. And if it does go lower, that's when you want to look at the levels and see that this very aggressive box right here, whether this can hold the move down. All right. I think that's enough for today. Have a good weekend. Bye.